another stock analysis. Today we'll be looking into the Honest company. So they specialize in online baby food and things like that. So honestly, don't know anything about the company right now. It is very bright outside, by the way. But we're going to be getting into them, seeing what they're up to, looking through the financials, mostly going through a little bit of their recent earnings, and yeah, that's about it. So make sure to subscribe if you're interested, and let's get into it. So, starting off, non-toxic natural baby products online. So, yeah, that's about it. No real metrics. Their market cap is sitting at 500 million right now, so fairly small company, honestly. Target price at 742, no long-term growth rate. Right now we're at just under $5 a share, so there is a lot of upside being seen based on that target price. However, if we look at which, you know what, we'll just go into the chart. If we look at the chart, this company has been way lower just about 2 years ago. So coming back from that is a pretty solid indicator that they've kind of turned themselves around. I think there is a little bit of a long-term support, kind of not super definite, but there is a long-term clear trend going up here, which is pretty good to see. So either way, getting into it, the growth summary is honestly not great. Positive sales at least, but overall I would say it's mixed, although realistically we just need more estimates here to really know how the super professionals are feeling about it. But either way, fairly mixed here. Sales are positive, so take that as you will. Let's see if there's any earnings that we can look into here. So there should be a couple things. So reports fourth quarter and full year financial results. So first off, let's see. Quarterly revenue of 100 million, increase of 11% from the year before. Gross margin expands by 530 basis points to 39% versus the year before. So margin improvement, sales improvement is generally what we want to see. There are just some highlights. I'll read through this. Financial results demonstrate that our strategy of these things is working. We've achieved record results, positive growth, and full year positive EBITDA as a public company. Oh, their first full positive adjusted EBITDA as a country for a full year. So that's pretty. It's a pretty solid achievement, I would say. Gross margin of 38%, 900 basis point expansion compared to the year before. So overall, I would say there's a lot of positive things here. I'm not going to read through everything just because it's mostly the same stuff repeated. 2025 outlook, that's what we want to see. So long-term financial algorithm consists of revenue growth of 4 to 6% annually, and continued EBITDA margin expansion. For the full year 2025, revenue will be in line with our growth algorithm of 4 to 6%. So basically, they're just trying to achieve that 4 to 6%. And EBITDA of 27 to 30 million. Includes what we know today about tariffs related to our product sourcing in China and Mexico. So let's now get a little bit further in. First of all, I'm going to go into the geographic revenue just to see where they're primarily selling. Which, okay, almost entirely the United States. So I'm assuming they're sourcing a lot of their products from China and Mexico, and that's what that means. But they are almost entirely selling in the United States, and that's about it. So anyway, going into the financials now, let's see what they are doing. Starting off with the income statement. So a lot of sales growth over the past couple years. They've seen 2 consecutive years of growth. 2022 and 2021 were obviously a little bit slower, but now they are seeing fairly solid numbers. Net income is almost positive. They did make a positive operating income, which they were talking about earlier, which is pretty good. Total shares is increasing very consistently too. Let's see when they went public quick as well. So they went public in, where is it? 2021. Okay, that's what I was looking for. So their total shares had a bit of a shakeup in 2021. So I was kind of confused why that was, but that is when they went public. But since then, they have issued a decent amount more shares. So that could be a long-term problem, but overall, seeing as they're seeing pretty solid growth now, I would say that's not really an issue. Moving on to the balance sheet now, let's see how their asset situation is. So assets are not really at their all-time high. That was actually in 2021, and that was mostly due to a large increase in cash, from what I could see. So overall, they really don't have a ton of assets in general. Property, plant, and equipment has actually been decreasing every single year, which really isn't that bad of a thing. That means they're kind of selling off those things, cutting costs, and they're still increasing sales, which in my opinion is very good. They have 75 million in cash currently, almost no debt. They have about 20 million total in debt, so really there's no issue there. Let's move on to the cash flows. So operating cash flow has been positive for 2 consecutive years, which is a fairly good sign. Investing activities looks like it's mostly just capex, and then obviously they were selling off investments, as we saw earlier on the balance sheet as well. And then financing activities, they are inconsistently diluting their stock. It's honestly not a ton either. This is $41 million worth, and this is a $550 million company. So that's not the craziest amount, but even still, it is something. Although they did do 100 million about 4 years ago, that would be like a 20% dilution now, which is insane. That is basically when they went public. So either way, I would disregard that for the most part. But 41 million, now that I'm thinking about it, that would be like 5%, probably 3 or 4% of their entire stock. So a little rough there, but either way, we did see 2 consecutive years of free cash flow being positive, which is also a fairly good sign. Let's look at the ratios now. So they were talking about it in the earnings report, how they have really been improving margins. So let's see how that's been going. So gross margin is at 37%. That is the highest they've ever seen. Operating margin just went positive, well above the 5-year average as well. And net margin is very close to being positive as well. I think they can probably achieve this within a year, just based on the way the numbers look. Let's check out the quarterly view of this and see how they've been improving. Little bit of a better view here. So gross margin at 38, operating at 1.8, net margin. Okay, this is basically the same exact numbers now that I'm looking at it. Either way, let's see, the debt to equity is incredibly low at 12%. So, like I was saying earlier, their debt position is perfect. They have no real issues there at all. And saying that, I think that's everything I wanted to cover here for the most part. So they are significantly lower than when they went public, back in 2021. And I think that is mostly just because of the timing there, the market conditions. But it seems like they're having fairly consistent positive growth now. You could see here they had 3 negative earnings reports, and then after that, they're now at 6 consecutive positive reports, or at least mostly positive, which is pretty good. So we'll have to wait and see how they develop into the future. But overall, I would say it looks like it's at the lower end of this kind of trend that they've been in. So it could be a buying opportunity. The earnings report was pretty good, solid growth numbers, nothing insane or anything, but solid growth numbers. They're sticking with their guidance. And yeah, that's all I really have for today. Thanks for watching. Make sure to subscribe if you haven't already. And I'll see everybody in the next video.